GameStop investors brought their A game today. Shares of GameStop, symbol GME, were up over 7%. Is that a clue that shares of GameStop could be headed to the moon? Or are the fun and games about to end? These are the questions we'll address in today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst and independent trader for the better part of 20 years. Today, we're going to be looking for clues as to where the big money might be stacked up, waiting for a discount for either a bounce trade or a lower entry price for a longer-term position. The way we're going to do that is we're going to look for support levels. And there is a support level right here in the 31.82 to 31.14 price range. There's another support level below that in the 30.45 to 30.07 price range. And then a support level below that in the 29.37 to 28.91 price range. So 3 support levels to consider for either bounce trades or lower entry prices for longer-term positions. Now let's go take a look to see if there are any clues as to where there might be some resistance, technical resistance in the chart. And yes, there is a clue of a resistance level right here in the 32.93 to 34.39 price range. And interestingly, we'll notice that current price is right nudging its way into that resistance level. So GameStop could be heading higher. It could be heading much higher, but this is a clue that there could be some resistance along the way, and we actually might get a pullback. We might have a temporary pullback caused by that resistance level into one of these support levels, and that would be an ideal situation if you're looking for either a bounce trade or if you're looking for a discounted price to buy GameStop for a longer-term position. So the way we would structure a trade for a bounce would be something like this. You could consider the first level. Put a buy limit order right there at 31.82, protective stop just below that level, and then your target just in front of the resistance level. The problem with that is that trade has a reward to risk setup of only 1.46 to 1. So that doesn't have, ideally we'd be looking for more reward potential of the trade. In other words, more space in between your entry point and that first resistance level. So yes, you could place that trade. Quite frankly, you could place a buy market order anytime next week. But as a disciplined trader, we'd be waiting for a pullback. If we don't get a pullback into one of these support levels, then we simply wouldn't place a trade. We wouldn't lose anything. Okay, I'm willing to miss trades. I do miss a lot of trades. They just run away and they don't pull back. But I'd rather miss trades than actually get too aggressive in a position that doesn't have enough reward potential relative to the amount of risk we're going to take. So if that's the case, you could place that trade and go for it, assuming that we just break, chop away through that resistance level. Or you might consider placing a buy limit order in the second support level, protective stop just below that level, drag your target to the same target price point just in front of that resistance level, and that trade setup has a 5.45 to 1 reward to risk ratio. In other words, for every $100 worth of risk you would take if you were to take this support level for a bounce trade, you could have potentially $545 worth of reward. So that is a much more favorable reward risk setup. The risk is it doesn't pull all the way back down to the 30-45 price range. If that's the case, you wouldn't get filled. But all the trades I set up have a much more favorable reward profile relative to the amount of risk, and so that would be the one that I would consider most likely going for. If you wanted to get even more conservative, you could go for the 29.37 price entry. Ideally, the trade would play out like this. You'd get a pullback to the 30.45 price range, bounce off that level, and go back and retest the resistance level, and maybe from that point work its way through that level. And then we consider, if we can work our way through this resistance level, we can set up a completely different trade. But for right now, I think the ideal trade setup would be one of these lower support levels for a bounce trade, or once again, a discounted price for a longer-term position. So let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week for more chart analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.